Okay, so the strategy basically, we call the entity strategy.
Mhm.
Obviously, you've heard of us talk about entity and talk of the E-frame.
Yeah.
The E-frame is the one I've just introduced them to, which obviously would mean that, you will get more trades, if you know that as well. But I would explain the entity first. Um, so I mean, you can use it on any time frame, on any assets, any market session.
Mhm.
Usually when we see, spikes like this, or if you like, when we see, tails,
Mm.
it's we are drawn to that. I mean, you'll be drawn to that because you could usually find an entity set up there.
Mhm.
Now, you talked of pivot points a while ago. Um, Obviously, even on here, you can see some pivots if we are by the word pivot, understanding the same thing. By pivot, you're sort of like talking when it goes like that, isn't it?
Yeah, support, it's support and resistance.
Okay, well, more of
Mm.
structure. Okay,
Mm.
so these are like, structure, because obviously, when you talk of support and resistance and structure, they are different. People kind of like see them as the same, but they are not exactly the same.
Mhm.
When you talk of, support, when you talk of structure, you are talking of, you're basically talking of the price maybe going up, and then when it reverses, that sharp end is the
Yeah, it's
is the
a
structure.
resistance. Yeah.
No, 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 is the structure. If
Okay.
it's going like this and it turns, this sharp end is the structure. Now,
Okay.
structure would also be the same as support and resistance.
Right.
Just depends on some, there's a little, there'll be a little thing that differentiates the two.
Mm.
Let me just, for instance, let's zoom, let's, okay. So here, for instance, you have structure and you have support as well, you know. So what is what? If you are putting if you are considering the very sharp end, the very end of the candle, the highest candle there, in,
Mm.
including the wick, that is structure. But if you are considering the body of the candle, not the wick,
Yes.
that would be support. Well,
Okay.
in this case, it will be resistance.
Mm-hmm.
This will be support.
Mm-hmm. Yeah,
This will be
the resistance.
resistance.
See.
Support and resistance would usually mean, where the body of one candle turns to a different color. So the yellow broken lines here, that's the
Mm-hmm.
resistance. The one here is support.
Okay.
The solid lines, on the other hand, the solid lines, which is the bottom end, the very, low of the candles there,
Mm-hmm.
is structure, structure, structure. You can see here, because the wick is very little,
Yes.
so it's more or less like structure and support are very close to each other.
Yeah.
Okay. However, with the entity strategy, we are working with the highest part of the candle, you know,
Okay.
usually with the wick. I mean, most candles have wicks. sometimes very small like this one, but they do have wicks.
Mm.
So with the entity here, let's see if we can find an entity. So you would have the bullish entity and you would have the
Yeah.
bearish entity. Okay, so here, for instance, let's say the price is going up, going up. This is the highest candle in this area.
Yeah.
That's the highest candle in that area. So
Yes.
you're going to be looking to work with that. You're going to want the last bullish candle to be taken out. By taking out, I mean, you know, a color of the opposite, well, the opposite color, closes below it. So it's taking out the low of this one. So this was the highest candle. The bulls were pushing it up.
Yes.
They got here, they couldn't go further,
Right.
and the candles began to oscillate until eventually this one closed below it. So this is the candle that took out this
Oh, right.
this
Okay.
last this last bullish candle.
Why? Because it was directly opposited.
No, I mean, no, I mean, okay, I mean, the candle, because this was the last bullish candle, that's the candle that was
Yes.
taken out by this one. Now, if this other candle is the one you are wanting to be taken out, because you know people would usually want to enter a trade when a candle, takes out another candle of a different color.
Okay.
So this being green, bullish, when a red candle takes it out, it basically means it's a possible reversal that's going to take place.
Right.
I mean, it's like a change of direction, a possible change of the trend. So that's the whole, idea behind the entity strategy. You know, so I mean, this candle is quite small. So sometimes I would not want to work with a small. I mean, it's sizable, but relative to the other candles, before it, it is small. So for me, really, I might want to use these two candles, this last candle and this one. That's where I talk of stringing them together or joining them together
Okay.
so that I know that, okay, fine, this two is what makes up the strong man. Whereas if the strong man is taken out, so that if the strong man is taken out, it means that, the bulls might have lost some strength or momentum. Maybe they don't have the energy to push up anymore. So what I would then do, I'll mark up this place. I'll also mark the high of that, candle, which means the area between the top of that candle and the bottom of this candle is what makes up the zone,
Okay.
the zone or the range. So I'm now waiting for price to break out of that range like it did here.
Okay.
When I say breakout, it has to close outside of it.
Okay.
So I mean, you can see this one came out, but it did not close. It went and closed inside. No, we don't want that. We want the price to close outside of it, but we want it to go and retest that zone, as in go back in. What I call the GWT retest is when the candle actually goes and closes inside the range.
Okay.
Not just come here and throw a wick. I want it to actually go and close in. And you can see, fine, it did close in here. It went up, came out, went up. So we would only now think of taking the trade once the price has broken outside of the range, it has gone back inside the range to give us a retest. When it comes back out again, like here, we would enter.
Okay.
I mean, sometimes you might say, okay, fine, this one barely just closed outside of it. So it doesn't show that the bears are now, are determined or have the power to push. So you might say, okay, well, I want it to actually close a bit further. Now, this one closed all the way from the range. You don't want that either, because when you see a big candle like this, it most likely is going to pull back like it did.
Mm-hmm.
However, what you really want is to be able to enter this trade as close to the range as possible so your stop loss is not big,
Okay.
because, this is the range. You are looking to sell, your stop loss is going to be on the other side of the range. So what you really want, you're wanting to enter somewhere around here. I mean, fine, you can enter here. If you had entered here, and at least with this trade, you would have won. Let's just say we entered here. The price then went up, but it came back down. It, did all the oscillation until it moved and gave us some huge pips. I mean, obviously, you would have taken, this would be like TP2 maybe. You would have had TP1, somewhere here maybe. I mean, the thing is, how do we measure TP1? We take the size of the range. We take the size of the range, which here is 2188. So from here, not from where you enter, because sometimes you might enter here. No, you're not going to take it from where you enter. You'll take it from where the low of the range. So from there to here is about, that's the 2188. So TP1 will be like here. Then I don't know, TP2 would be like here. So this one basically gave us, this trade would have given us like, um, more than two, better than 2 to 1.
The solid yellow line on top, what is that for? Is that to measure the where it's weak? The
Yeah,
top. Okay.
because what you really want is, you want the strong man to be taken out,
Mm.
and the size of the strong man is what you're going to use for the range.
Okay. Yeah.
So, uh, which obviously you're going to work out, by measuring it to get TP1 and TP2 and all that. So the whole idea is, the price is pushing up,
Mm.
the bulls are in control. The bulls are in control. They ran out of steam here.
Yes.
Hence, that was the last bullish candle.
Mm-hmm.
So to know that, they've really run out of steam, in the
Mm-hmm.
sense that the bears are now taking over, the price has to go in the other opposite direction. It's like, the tug of war.
Yeah.
No, I'm not talking of the physical tug of war now in real life.
Mm-hmm.
You are pulling a rope on one side, someone else is pulling. The stronger one is gonna win.
Yes.
I mean, you and I could be, in a tug of war, and you are winning initially, but you run out of steam, out of strength. Then I then, just, drag you, you know, to my side or whatever. So that's basically what's happening. It's like a battle between the bulls and the bears.
Mm.
Going all the way up, the bulls were winning, but they ran out of steam, and the bears took over.
Mm-hmm.
But to actually know that, yes, they have gained control now, they
Mm-hmm.
have to they have to go past the last
The last one.
the last bullish candle. I mean, it's the same thing on the opposite side, in the opposite direction. The bears were in control. Okay, fine, it gapped down, they were in control, they were in control. This was the last bearish candle. So this could have been the strong man, but no, it's kind of like a small candle. The idea of a strong man is that it has to be a big candle.
Mm.
The bigger the candle, the better, because a big candle shows more strength, more power.
Mm.
Like this one is a big candle. It started getting smaller and smaller, then a big one again, including the wick. Then obviously, when they start running out of steam, usually it will become a smaller candle, or a smaller body with a big wick. Here is a small body, a small wick. So I want to work with just this one as a strong man. I would
Mm-hmm.
I would link it up with this,
Mm.
so linking up all these three, so that it now appears as one.
Yeah.
which is the entity, so either call an entity or a strong man. So, I mean, putting this here, again, I'll put this at the bottom of that candle and this one at the top of it, which means this is the range. This is the range, that I need the price to come out of and come back into, come out of it again, and then we'll take the trade. So on this occasion, the price came out here, came back in, which is a retest, which is exactly what I want. I want it to definitely come in and close inside. Then it did all that, came back out. It was a big push out. I usually would not take the trade, like I say, far away from, because if you take this trade here,
Mm.
if you take that trade at the close of that candle, you're going to have your stop loss, on the other side of the range, which means obviously your stop loss is going to be bigger
Okay.
as opposed to if you entered close enough to the range, your stop loss is
Mm.
smaller. I mean, on this occasion, yes, it did not even come close to the range or the stop loss. It just pushed up, came down a bit, and then obviously went and delivered. But you don't want to take risk, really. You don't want to be taking unnecessary risk in trading. We're not predicting. We want it to be that, the risk management is tight.
Mm.
So with this one now, I would have let it go. I mean,
Okay.
the worst I would have done is, okay, I'll say, okay, fine, this big candle, maybe I'll let it, if it comes back to 50% of that candle, I would, on this, it didn't even do that. So, we'll let this one go and wait for the next trade on a different pair or on the same pair. I don't know if you are getting it so far.
Yeah, yes, I am.
Any question?
Yeah, it's just where would you not consider where it had gapped
Okay.
in
Uh,
order not to take?
Not to take any trade.
Mm.
I mean, with the strategy, with this setup and all that, if it had come close to the range, regardless of the gap, I would have entered.
Mhm.
Because I find with this strategy, you know, you can get away with a whole lot of things that you will not get away with some other strategies. I mean, some other strategies, you would say, okay, fine, you know, because of the setup and all that, maybe we should wait for the gap to be filled first. I mean, this is basically, I mean, the gap was filled here, having moved up. You say, okay, maybe it's only then I would enter a trade. Or, if we're coming up against support and resistance, usually, some strategies you won't take the trade. But with this strategy, you find a lot of the times, even though you are coming up against support and resistance, you can still take the trade and win,
Mhm.
because it's like the setup usually tends to you know, deliver the result regardless of support and resistance. So that even if there was resistance here, it will still break through and give you the number of pips that it's meant to give. It might then come back, but that will be after it has given the pips.
Yeah.
So with this one, for instance, since TP1 is measuring the range, 1988, usually you will get that 1988 even times two before any resistance or support is able to stop it.
Okay.
So I mean, it's very simple and straightforward. I mean, yes, even if you trade on your phone, what you will be looking out for are, pivot, what you are referring to as pivot points, or well, pivots, or if you like, sharp reversals. I mean, here, for instance, you can see the price was coming down and it
Mhm.
reversed, it reversed. As long as you have a candle with a wick
Okay.
that sticks out,
Mhm.
the wick on this one makes this candle stick out more than other candles.
Yeah.
If you were to come here If you're to come here, it's not too obvious. So usually I could decide to avoid these ones. I mean, they are, well, one, they are small candles, and two, the wicks are small, so I won't work with that. I want it to be that, the wick is kind of like very obvious, and,
Mhm.
you can work with that. Now, so with the entity, there are two, it will be a case of, the entity setup is a case of two candles, one with the wick sticking out more. That's the wick on the right side,
Yeah.
you know. So we have this red candle, then the green candle with the wick sticking out. There are times when the candle on the left is the one that's going to have the wick sticking out the most.
Yes.
That is, we call that HR, halt and reverse. But I rarely use the word, I rarely use the term HR now because, the entity and the E-frame basically, covers everything,
Okay.
you know. But note that the entity setup is when you have is a two candle setup, at,
Yeah.
at least two candle setup,
Mm-hmm.
with one of them sticking out the most. The one sticking out will be the one on the right. So this is a bullish entity
Mm-hmm.
because you are looking to buy. Let's look for a bearish entity.
But it can also stick out on the left as well, isn't it?
Yes, if it sticks out on the left, like I say, you know, that is basically when you might want to um, consider trading it as an E-frame strategy, which I will share soon. But
Okay.
think of the entity is the one sticking out on the right.
Yeah.
We're going to come to the one on the other one soon. Okay. This one, on the other hand, is the one sticking out on the left. You can see this candle. Okay, let's consider this one as well. So consider these two candles. The one on the right, or the higher one,
Mm.
is the one on the right.
Yes.
Whereas with this one, the higher one is the one on the left.
Yes. Yeah. Mm-hmm.
You know, the bottom line is the way you want to trade it, what you are looking to do is for this candle to be taken out.
Mm.
Because the price was going, it's put it this way, it's mainly a reversal strategy or a continuation strategy. Reversal in the sense that the price was going up, going up, going up, it reversed.
Yes.
You know, when it's a continuation, you are thinking of the price coming down, it tried pushing up, but it reversed. It continued. So in a sense, it did not reverse here because the trend is already down. It only continued, you know, pushed up again, continued down. So you trade usually for trading reversals or continuation. In this case, the price had come all the way down. It's reversing on this occasion. Whereas from here, where we had well, if you consider this a pivot, it reversed. Sorry, it continued. Pivot again, it continued. Pivot, it continued. Pivot, it continued. But it got here, it then reversed. So it's used for trading reversals or continuation.
Okay.
So again, we have the candle on the right sticking out. So that's entity.
Yes.
The candle on the right sticking out, entity.
Yes.
Here, the candle on the left is the one that's sticking out.
Mm-hmm.
You know, the one on the left is the one sticking out. Or if you like, well, is the higher candle.
Mm-hmm.
These are bearish entities. Now, with a bullish entity here, even though they are both red on this occasion, you can see, well, really, let's work with, it should be two different colors, really. So this one is the one on the left sticking out.
Yes.
You can see, like I say, we call it halt and reverse. So entity is the opposite of halt and reverse. Halt and reverse because the price was going down, 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 down.
Mm-hmm.
This was the last red candle.
Yes.
This one closed and this one opened and it moved up. It did not come to create an equal.
Yes. Yeah.
Basically just continued, almost like, if you like, a sharp stop reversed. So that's like halt and reverse, HR.
Okay.
Another halt and reverse. Okay, you could say this was a halt and reverse as well. Price was going up, closed here,
Mm.
just reversed. It didn't, go as high as the wick there. This is a halt and reverse, going down, halt, reverse. So you can see with a halt and reverse,
Mm.
the lower candle will be the one on the left. I mean, it's not difficult really.
The lower. Is it lower?
Yeah, the lower candle, the wick,
Okay. Mm.
because it was going down. When it closed, the next candle did not
Come near it. Yeah.
follow through. Instead, it just continued the opposite direction. You know. Okay, so I've showed you how to trade the entity setup. So halt and reverse, the entity is the other way around. But
Mm.
however, you know, just to make you know that you don't really have to bother whether it's entity or halt and reverse or anything else. Just focus on, consider what you are looking for, what you want to happen. You basically want the candle that has been, the color that has been, showing predominant strength to be taken out.
Yeah. So,
That's all that matters. So it
mm.
doesn't matter whether the wick is on the left or the right or the low. No, what matters is that the candle is taken out. So in this case, if you want to work with this one, this is the candle that was coming down, the red were, the one in charge. It got taken out here.
Where? I can't see your cursor. Okay. Yeah, that's right.
So in a sense, it's like a change of government, change of power. It's like power has changed hands. The red were in control all along, but power changed hands. The
So
green,
when you said it should do it within the range, because it didn't come as far down as the red candle,
what didn't come down?
the green one that took it out.
This one. Yeah, exactly. That's what I'm saying. So what I'm saying is, what really should matter to you is that power has changed hands.
Mm-hmm.
That's basically what you want to trade.
Mm.
I mean, yeah, so the red were the ones in charge,
Yeah.
but the last red candle, which is sizable enough, relative to other candles, sizable enough. So you don't even have to string it together. Just work with that one and wait for the candle to break above it, like it did here. We didn't get a GWT retest proper here. There was a retest in the sense that this came and touched that area, but it didn't come and close within. I mean, you might want to take the chance, but the safer one is when the price actually breaks out, comes back in and closes. When it comes back out and closes, you have to wait for it to close, because if it has not closed and you take it when the candle is still open, it could then come back and close inside. You don't want that. So you want to only get into trades with a closed candle. So here we didn't get the GWT retest like we want. even though it was still a winning trade. Like I say, it's then up to you to decide if you want to take the risk. I just don't like taking too much risk and losing unless I have another reason for taking the trade, because considering that this came and gave some sort of retest and went and closed there, in the first place, you would have been entering very far away from the range, which means your stop loss will be bigger.
Mm-hmm.
I mean, one thing that makes one a profitable trader is that your risk to reward is good. You are risking one to gain two, or at least one.
Okay.
One to gain one. So if for instance, you enter here and you place your stop loss here, you enter here, place your stop loss at the bottom here. What then happens if it just then reverses straight away? It basically means you've lost that trade. By the time you lose like that 2 or 3 times, well, that'll be a dent on your account. And when you now win, who says you're going to be winning 2 to 1? Or, that's basically why I would prefer to enter as close to the range as possible to reduce my
Yeah.
stop loss.
Yeah.
I mean, the things I said in the videos I posted in the room, you will begin to understand, when you watch once, you've understood it here. So what we basically want is for the power to change hands, for the green to take out the red if we are buying, and for the red to take out the green if we are selling.
Yeah.
Let's use this. Um, okay. So I want you to guide me now. I mean, this is the highest candle. Where do I mark as the ranges?
The
Tell me so I can put the lines there.
can you take which one are we looking at now? Top or bottom? Just yeah.
We're working with this one. This is the highest.
So we can both highest, both of them almost are the same. I think it's the green, yeah, where the green is.
This one.
Yes.
Yeah. I mean, the thing is, if they are both, even if they are equal highs, fine, you can work with it. Yeah, even if they are equal high, they're not quite, is very slight difference, but fine, you can
I
work.
think the green is higher if you
Yeah. So note that it wouldn't really matter which one is higher, whether it's the green or the red.
Okay.
You just want, because you are looking to sell. So it's not so much the wick at the top now, is the wick at the bottom as well that counts, because that's basically what is going to be taken out for you to sell. I mean, if you were buying, then obviously, in a sense, that's when the top will matter. But we want to place the line at the highest of, the candles in that area, whether it's the left one or the right one. So what is the other side of the range? Where do I place the other line?
So the other line will be should be here.
Where?
Here. Can you see my cursor?
No.
No, I don't think so. Sorry. Oh, But then I'm moving away from, because this is what we are considering. This is the this one, this candle, this week.
Okay, no, I'm the one sharing my screen, not you. So I can't see your cursor. Just direct me.
Okay, so move your cursor. Yeah, can you move it?
Tell me where to
Can
place
you
it.
move it up? Move it up. Down, down, down. Come down to where the red candle is. The mid, no, come further down. That's it. Yeah.
Okay. Okay. That would be, why have you chosen here?
That is the closest to the candles at the top.
Okay. What you really want is you want to determine what to count as the strong man, because the strong man is what needs to be taken out. Like he says in the Bible, if you are going to plunder a strong man's house, you will have to first bind him.
Mm.
So if the green candles, the bulls are going to be plundered, you want to basically overthrow them, you have to disarm or take out, their defenses. In this case, the strong man would be the one that needs to be taken out. We've termed him the strong man because he's big, and obviously, the size of the candle, if you like, the bigness of the candle
Mm.
is what shows strength. It shows they are strong. So if a big candle is taken out, it's like you've dispossessed, you've disarmed them, to take over. So there can be no changing of power or power changing hands if the strong man is not taken out. So this last candle, the last bullish candle, because note the candle was pushing up.
Yes, yeah.
It was pushing up, and this is the last bullish candle, which happens to be a big one. If it was a small candle, like we saw previously, I would have combined it with, two or three or more. I mean, because what you're doing now is almost as though you combine one, two, three, four green candles. Even though that would still work, it obviously then means you'll be increasing your stop loss as well. Your stop loss will be bigger. And you would not necessarily get a quicker trade. So you can work with just one sizable candle. I mean, obviously, because you do trade, in a sense, you can tell if a candle is big. I mean, this candle obviously is small. If you compare it with other candles, this one is small.
Mm.
This one is big compared to others. This is big. Average size, average size, average size, massive. So this one is a sizable candle. So really, you want to work with the range of, just this candle.
Which one? The red one, the wick of the red one.
No, the green one is enough. Because the red one is the one that is,
Taking out.
yeah,
Yeah, so that's what I thought. I thought you wanted the one that was taking it. Okay, all right.
yeah. No, you are working with the one, like,
That needs taking out.
yeah,
Okay.
which is the
The
green,
green, yeah.
you know. I mean, yeah. So every candle is an entity in a sense. Every candle is an entity because entity basically means, a personality or something like that.
Hmm.
But you could also have a group of candles, which is an entity as well.
Hmm.
Just like, in a company, you have the board of directors, which could be made up of three or four or five of them.
Yes.
That board is an entity, is one entity.
Yeah.
So if it's a company that does not have board of directors, it just has a director, he is also an entity. So every candle is an entity. So when you pair them together, you now count, if it's three of them you are pairing together, you now count all those three as the entity.
Okay.
So this is the strong man. That's, it so happens that this one is inside, that range. That's fine. These obviously are stronger than he. They are taking out the strong man. So that's the range. This one candle tried taking it out, but it could not. It went and closed inside. The next one took it out.
Okay.
But then we want a retest. So we got a proper retest here. Can you tell me why it's a proper retest?
Yeah, because it was the same. It was it wicks above the red one.
No, it's a proper retest because it closed inside. It closed inside the range.
Okay.
What I mean? Regardless of whether it has a wick or not, as long as it closes back inside the range, it's a proper retest. So it's a retest, putting it in a different way you would understand. It's like,
It's confirmation, isn't it?
Yeah, it's for confirmation, really. Just in this case, to show that it can pierce that area. Okay, fine, it can pierce that area, but it can go no further. I mean, sometimes it might come all the way as far as the beginning of the range as retest. Like this one, for instance, this one went even higher. It could even go higher. It's when it begins to come back out, you know that, okay, fine, he went far, but it could go no further.
Okay.
If it was the case that he actually broke outside of it, then this setup becomes invalid. You now have to work with it because there's a new high. If a new high is created, you have to disregard this one and work with a new high. I'm sure we can get an example of that. All these examples are in the other videos, so you will need to go watch that video again.
I will.
Grasp it more, because now that, if you like, this foundation has been laid, some of the other things over there will make more sense.
Yeah.
Okay, a good example here. So the whole idea is, when the price is going in one direction, you are waiting for
a reversal.
You are waiting for a candle to be taken out for you to jump in. I got two trades today. I got one on gold. I got one on GJ.
Okay.
Just this evening, because you can see I posted in the room saying the best time to actually scalp gold.
Yeah, you did, yeah.
Because it's moving slowly as opposed to it wicking up and down and taking you out. So a good example is here. You see the price coming down. You are thinking, okay, when is a red candle going to be taken out? You see this one, and then a green one starts forming. So you are thinking, okay, it could be here, it could be here. You now mark the bottom of this. You now mark the bottom of this red candle because the green one is forming. You are thinking it's going to come and take it out, but no, it did not. So you now quickly mark that area. It didn't take it out. So it kept on going. You are thinking, okay, fine. The downtrend is not done. It's not done. Then you see this one again. You see a green candle. You are thinking, okay, fine. It's coming to take it out, maybe. But then this candle is small. It won't count as a strong man. I need to pair it up with this too. So you put this one there. You're thinking, okay, fine. It's going to take it out. But no, boom, it dropped below it. So you're thinking, okay, fine. You see another candle, you see, okay, fine, maybe this green one will be taken out. You put this one there, you are thinking, okay, fine, maybe it's going to be taken out. And yes, it's been taken out. But You want a retest to show that the trend is actually finished
Inside it, yeah.
at least temporarily, because sometimes it could just be a quick pullback before it continues, but you just want to quickly catch your, since you scalp, I mean, well, you would have to practice this, well, if you're going to apply to scalping as well. So yes, this green candle was taken out, the strong one was taken out. We got a proper retest, closed within, it even went down further, but guess what? It broke out of the range. So this entity setup is now invalid. So you're now thinking, okay, fine. We're looking for another red candle to be taken out. Maybe this one. Well, you're thinking, this one it's an average size. It doesn't quite pass for a strong man. It's not as big as this one or big. I mean, it has to be bigger than, you know,
Yeah.
the average size. I mean, in this area, you can tell which is a big candle and which is average size. This is average size. This is big. So you're thinking, not big enough. So I'll pair it up with this one, which is inside it. This one, I'll pair it up with all this. So all this are paired together. 1, 2, 3, 4, 5. So if the price is taken out, if it takes it out, then fine. We'll see if we can work with that. And boom, it takes it out, comes back and close inside. You're thinking, okay, fine. Aha. So we've got a trade at last. You've got a trade. Let's make it yellow broken lines. That's my entry. When you see my yellow broken lines, that's where I enter or prefer to enter. So the size of the range is from here to here, which is like 65 pips. We're targeting at least 65 pips. From there, and boom, we got more than 65. We got almost 2 to 1. So you can see, let me mark here. So you can see what I was saying. You get away, this strategy lets you get away with what you will not get away with other strategies. So even though it was like a downtrend, we're still able to capture the move.
Yeah, that was a tricky one though.
Yeah, we're still able to capture something, I mean, obviously, if you are trading with the trend, if you were to catch it from here, then it's you are flowing you're going with the flow.
Yeah.
It's going to go all the way down, so no need to panic. You catch more pips. But if you are counter trend trading, just go for what you can get. I would usually advise, if you're counter trend trading, go for 1-to-1. Just measure the size of the range. Go for that. Yes, this one gave us like almost 2-to-1, but hopefully you would have taken profits at TP1 and move your stop loss to break even. I mean, do you tend to do that? Do you tend to move your stop loss to break even?
Yeah, I do that. Yeah.
Okay.
I do that, yeah. So that when I'm not there and it reverses, at least there will be no loss.
Yeah. It's definitely very important.
Yeah.
Okay, so I mean, now that is the entity setup we've been trading.
Okay.
That's the entity. I first taught that to the group, was it last year or 2 years ago, or whatever? It's quite a while. Entity, but then I just introduced the E-frame. So with the E-frame, it's not so much a 2-candle setup whereby you are looking for one color to be taken out. With the E-frame, it could be any color.
Okay.
And it's the one candle. It's the one candle. So it's like the candle has to break its own high or its own low.
Right.
Yeah. So with the E-frame, this is a good example.
Okay.
Do you know what you call crosshair?
Yeah, I think I am probably have heard of it.
This is the crosshair.
Okay, yeah.
So if you click on that, you can see I'm moving my cursor now. It's moving. It's from the crosshair. So there's a vertical line and a horizontal line. You can see the middle of it like there's a bull's eye there.
Yeah, yeah.
Yeah, you can see so the Ephraim candle, you want to create a crosshair if it has not formed it on its own. This one, there's a crosshair on its own because the range at the wick at the top is equal, more or less equal to the one at the bottom. I mean,
Okay.
this bottom one is slightly longer, but it's good enough. So with the Ephraim strategy, which is similar to the entity, it's just an advanced entity strategy.
Yeah.
You would place it at the top and the bottom.
Okay.
You want a break and retest, break, retest, retest, not the perfect retest that we want, but like I say, sometimes if you can combine it with other strategies and you can see other price action setups there, you can decide, okay, fine, I think I'll take it, but this one would have been a winning one, even though it didn't retest. So on this occasion, it went all the way. It came back into the range, which is what we want, but then it broke out. So if it breaks below it like that, if it breaks out of the range on the other side, this then becomes invalid. You then have to look for a different, candle to use for Ephraim. You can use any of these candles as an Ephraim candle, even though they have not formed perfectly on their own like that. You would then have to create, an imaginary wick. This one is kind of like formed on its own,
Mm.
but I could be a bit fussy sometimes, whereby I want the top wick to be equal to the bottom wick. So if I say this is the top of it there, the top wick is kind of like a bit longer. So if I place this there, yeah, but I would maybe make it there, even though there's a gap, but I know that it's just me extending an imaginary wick.
Okay. Yeah.
So in this case, you want the price to go out, come back in. Guess what? It closed in, it didn't come out. So when it comes back out here, you take it. The range is about 60 pips. Do we get 60 pips? Boom, we got 60 pips.
So what you want is for it to go back up and come back.
Yeah, it has to break out of the range.
No, break
You know,
out of that range and then come back
inside,
inside the range.
yeah, when it comes back inside the range and when it comes out again. So, the whole idea of the retest is to see, okay, who is really in charge, who's really in control. So there's that range, you know, price breaks out.
Mm-hmm.
You're thinking, okay, the bulls are in charge, the bulls are in charge. The bears say, no, we're not going to let you, have an upper hand. They come back in, almost like calling it a bluff. They come back in, but the bulls come back out again, which means
Mm-hmm.
they are in charge. There are going to be times when it goes in and out until eventually, but the retest is basically, the other color bluffing and saying, no, we're not going to let you have your way. You know, in the sense, the price wants to go up, but the bears are saying, no, we're going to keep the price down inside the range.
Mm.
You know, so I mean, if you check it, the range is usually where there is, some activity,
Mm-hmm.
place where, there was consolidation. You can see many candles in our area. So what I was saying a while ago is there are times when the candles will form, the kind of they will form the crosshair for you. The other times when you have to form the crosshair, in the sense you have to draw, you know,
Okay.
like this one, for instance, you know, the wick on this side at the bottom is definitely
Longer.
the one at the top. So what I would do, I'll measure the longer one, that is like 46 pips. I'll take it up to 46 pips
Okay.
here, somewhere there. So this is now the range.
Right.
Now,
Right. Okay.
even though you cannot see the wick here, but
Mm-hmm.
we are just seeing it as an imaginary wick.
Yep. Yep.
So again, the price breaks out of the range.
Mm-hmm.
So whether it's the E-frame or the entity, you want to create a range.
Okay.
The price breaks out, comes
Mm-hmm.
back in, you enter here. We're looking for how many pips? We're looking for about 93 pips. Boom, we got 70 something, but we're not done yet. The price, let's do this. Uh, okay,
What
so,
will be my stop loss though?
okay, 1 minute.
Okay.
So basically, the price broke out here, came back in, we entered here, it pushed all the way up, came back in. We're looking for how many pips again?
92.
92. We didn't quite get it, but I mean, well, 91, so you can see it almost certainly gives you a one-to-one,
Mm-hmm.
one-to-one or very close to one-to-one.
Okay.
So, you know, one of one of the strategies I use sometimes, it just depends on my mood or whether I want to, what I'm free to watch the chart or whatever. If I don't have time, if I just maybe I need to be going out soon, I'll just set it for one-to-one and go
Okay.
and close it at one-to-one. As a matter as opposed to um, letting it hit TP1 and then I'm going to let it run for TP2 or whatever.
Sorry, when you say one to one, what do you mean by that?
One-to-one, you are risking one to get one.
Okay, okay,
So you
okay.
are risking 50 pips to get 50 pips.
It's okay, okay, okay.
I mean, the size of the range is the size of the range is 1R.
Mm,
2R will be times two.
two, yeah.
So if the range is 50 pips, times two will be 2R, which is
Yeah, 100.
100. So one-to-one, sometimes I'm okay. I mean, what I could do, I mean, on this occasion, this was like I always say, if you follow me closely, whenever you've entered the trade, like say we entered the trade, it broke out here first, came back in, and it then broke out here. So we entered the trade on this candle. At the close of that candle, it came back in. Can you remember what I always say when it comes back in?
What you always say, what do you always say now?
When it comes back in, when it pulls back, it's a better price. You're entering at
Oh
a,
yeah, yeah, that's right. It is a bit, yeah, yeah, inside.
so if it comes back in, the first one was there. If it comes like it did come back in here, I'll take two. So if I know I'm taking two or three positions, I'll just settle for one-to-one. So
Okay.
I know I'll just come out here, which would be like how many pips again? 90, let's just say 90 times two, which is 180.
90.
If it's three positions, 90 times three, which is
Two,
instead of me,
180.
yeah, instead of me waiting for TP2 and TP3, I've collected all my TPs as it were.
Okay.
Although fine, given that if you lose that as well, you also lose all that. But, at least you've given yourself a better opportunity when it pulled back in and you got in again. So just take it in your stride, don't be loading up on entries or positions just yet until you've perfected the strategy a bit. So the only thing about the E-frame one now is when you have to draw,
Okay, to match
yeah,
the other line, yeah, if it's not as long.
yeah. So that's basically when you have to do that yourself. So okay, this one, for instance, is similar to maybe this was even a trade. No, okay, this is February. It was similar to this kind of trade I took today, whereby this is like a hammer. This one is like a hammer, isn't it?
Mm. But the opposite, the line, if you drew the line, that would be longer though.
What do you mean?
You know, the green one, this green one sitting there.
Yeah,
If you draw the line on the,
to the
yeah,
other
on the
side.
opposite, yeah, it's going to be longer than it.
No, no, no. You try and keep it, So to do that, I mean,
Oh, I see. So you don't go all the way. You just need to equalize.
yeah. So with this one a while ago, or similar to what we did here, you can see it's a very thin body.
Mm-hmm.
So in a sense, you just place it on there, measure up. Whereas this one has no wick at the top.
Wow.
So what you will do if it's a candle like this, just measure from the body to the wick,
Mm-hmm.
which is 25, then go to the top of the body,
And do 25.
25. So on this occasion, you know, you're measuring from the body. If it was a candle, if it was candle like this, oh no, if it was a candle like this where the body is small, like this one has a bigger body. So just measure from the body to here,
Mm.
about 34, from here to here,
34, another 34.
which is like 34, and that is the range.
So where would be my
Stop loss.
stop loss, my entry, and my take profit? If you can just use the example that you just showed me.
Okay. So, you've drawn this range now.
Yeah.
Uh, so we are entering, well, that's the candle where we are entering, if you like. No, we're not entering here, but that's the candle we're going to be working with.
Mm-hmm.
Let me just take this one out. So this is the Ephraim candle. So basically, what you want to do, have you heard of ATR before?
Are they
Average true range, ATR.
average true range?
No, no, you
I'm
don't.
hearing you now. Okay.
It's either you know or you don't know.
Mm.
Okay, so the average true range, ATR, basically, you know, um, is a range, is the average of, usually people choose the last 14 candles, the range. So from here, if you consider this candle from the top, including the wick, that's about 86 pips. The next one is about 62 pips. The next one about 31. This one is about 48. So I mean, like we did average in maths in school. You you add up all 14 and then do
You
the
heard about it too.
well in 14 in this case.
Okay.
Usually in trading, when they talk of average to range, they usually consider 14 candles. So I mean, you don't have to necessarily now come and start measuring all of them. You can just eyeball it and guess. You can just choose. I mean, if you consider all this as the 14 candles, you can tell this is the biggest one there.
Mm-hmm.
And you can tell this is like the smallest one. So you just kind of like get an average size of them. Maybe just say, okay, fine, I'll go with this one. Maybe I'll go with the range of this one, which is 63. I'll just add maybe 2 pips to make it, let me just say 70 pips. So what you do is you've drawn the range. This is the lowest candle. You will now use the ATR of 70 pips and place your stop loss there. Now, don't compromise with your stop loss. Don't say, oh, I don't want this stop loss too big. Believe me, this strategy is self-contained. You know, I have,
Sorry, Pastor Francis, you need to come again with a stop loss. How you got that 70?
okay. The average true range is the average of the last 14 candles.
Okay, yes.
I mean, this is the candle from which you are working. This is one
Mm.
you're using, setting your stop loss. So
Mhm.
if you were to measure each candle, for instance, the last 14 candles
Mm.
divided by the total divided by 14.
Mhm.
But like I say, you don't really want to start measuring all this, who has time for that? So what you want to do is just to eyeball it and
Okay.
and just measure maybe the biggest,
Mm.
which is 86, and maybe the smallest, which is 20. You can just tell, okay, if I was to add all of them together from 20 to 86, maybe, halfway, point would be like, I don't know, what would you go with? What would you say?
80 plus, so that would be
If the biggest is like,
50. I'll say 50.
yeah, let's just say, 55, 60 or something.
Mm, mm,
Some just an average number between the two. So
mm.
you will go with that number, which would be the average of all those 14, and you will add it to the low. This is the lowest candle. So you will now measure 50 there.
Okay.
And oops, you now measure from the low of that range will be like 50 or 60, and you have your stop loss there.
Okay.
Don't say, oh, well, I don't want my stop loss that big. No, believe me, you want to use at least one average, one ATR.
Okay.
Some people even use one and a half or two. It's not necessary for this strategy. Usually one is fine. I mean, to be honest with you, I mean, you don't have to be that fussy. You can just, with time, you will soon begin to know where to just place it instead of having to really measure it with a tape rule or whatever, and that's your stop loss. So like I say, how do you get the TP?
Yes.
How do you get TP when I'm asking?
What about the entry though? Oh, the TP. So let's see. Oh, where's that candle again? This is what we're working with.
We're working with this candle.
We're working with this one. Yeah, that one. So yeah, the TP, you know where that solid. Why would the TP be there though? The solid green, not the dotted.
No, that's just there. I just put that there.
Okay.
How do you work out TP1?
Oh, right. Okay. So then I could do a reversal. So that 50, if I extend my candle, my line.
How would you work TP1? How would you decide how to work out TP1?
You know the 50 that we got to work out the stop loss?
Okay.
I'll do it for the top as well to get my TP.
No,
No?
no,
Okay. Oh
no.
dear.
Okay. I mean, you would have to watch the video again anyway. Fine. I mean, we've covered a lot this evening, but you would have to watch the video again. So with the TP, you have to use the range. The size of the range is what's going to be TP1.
Oh, the size. Okay. The entire. All right. Okay. Okay.
Not including the stop loss.
Yeah. Yeah. I know. I know. Yeah.
The size of
Yeah.
the
That's it. Yeah. Yeah.
which is 84,
Okay.
and you take it up 84, that's going to be your TP1. So round about there will be
Okay.
TP1.
Where will my entry be?
Just 1 minute.
Okay, the size of the range is my TP1.
That's TP1.
Yeah.
Your entry, how do you decide where to enter? What's the regular procedure?
I am so used to market execution. Mm.
Well, yeah, I mean, if you are by your phone or your computer, you can do market execution. You know, really, really, with this strategy, market execution is what you're going to do because unless you come to your computer or your screen and everything is just set for you to take. Otherwise, you will have to mark it out and just wait to, I mean, you're waiting for the candle to close. You're not going to enter when the candle has not closed.
Not close here, of course.
So in a sense, if you are trading it off the 1 hour, you're going to be checking your phone, at the top of the hour. If it's every 30 minutes, you'll be checking every 30. If it's the 2 minute time frame, you are checking every 2 minutes. The candle has closed. But there is a general procedure for determining when to enter though. So tell me, we've gone over it a couple of times today.
Okay, I'll be guessing now. Just a minute.
Okay.
When it's what's it called? When you see that candle that close that closed out there are three candles along the green one that we're using.
This one?
No, yeah, that one that we're using. So you have the green, red. So we use that green one to determine our entry.
This one?
Yeah. Am I wrong?
Okay. We do want a retest. A retest is very important for this strategy. If you don't get a retest, you would get a high losing rate. Because the retest is basically, calling the bluff. So the bulls are saying, on this occasion, the bulls are saying, yes, we are pushing, we are going up, and the bears are saying, no, you are going nowhere. There has to be a test of, is a battle at the end of the day. There has to be the opposite color saying, no, you're not going that way, you are going our way. If you don't have that, it means there's no battle. Is this one is about the survival of the fittest or the strongest. The strong man wins. So there has to be the breaking out and the coming back in to retest.
So it's the next one to it. Next one to where you are right. Oh no, you mix it. Yeah, that one.
Well, yeah. I mean, fine, you could have taken it here, because yes, it did retest, but like I say, you would have to decide if you want to take it with this kind of retest or if it's my preferred retest of the price coming and closing within the range.
But
So
which one would that be then? Because I said the one that closed and you said no. I said the one next to it. I said that one. You said no.
yeah, that's what I'm saying. It wouldn't be this one because this one basically it barely just closed above it. It had not retested.
Mm,
So this one closed above it. This one opened. You can see it threw a wick at the bottom.
mm, mm.
So that's some kind of retest because it tried pushing back in.
Okay.
So this one did not retest, it just closed out. This one retested, so fine, you could have gotten in here at the close of that candle, or if you were wanting a more foolproof retest of the candle actually closing inside.
That's the only one that closed inside.
Which
That
which one?
that one.
This one.
Yeah, yeah. There's no other one that closed inside within that range.
Okay, well, this one didn't quite close inside. It closed on top.
Yeah, so there's no other candle.
Yeah. So what I'm saying is you could have either decided to enter this trade here because it
Mm,
gave you some sort of retest. You could have entered this candle here or let this trade go,
okay, all right.
which means you could have lost this. Fine. I mean,
Mm-hmm.
because there are times when you will definitely get it giving you the proper retest.
Okay,
But
sure.
like I say, there's what I'm seeing here. I'll just leave it at this because other entries will be more advanced for you. So at least get familiar with this,
Mm.
you know, kind of entry first before you progress to the more advanced one. So we've covered, the entity
Entity
and
and the different, yeah.
you would, Bunmi, you will really have to watch, because I see it took you some days to watch the video. It's as though I wouldn't want to believe you were not that enthusiastic about it. You know, you really have to do the work. I mean, I can't do the work for you. If
Yeah,
you're,
I'll do it. I'll watch it. So I'll rewatch it.
yeah, I mean, start off by watching this one since, this has been very, this is like one-to-one.
Mm,
You can definitely remember everything I said, as opposed to the recording where I was talking to everybody and it was like not personal. This is more personal and direct. So, definitely watch this one first.
Okay.
Watch the other
Yep.
2 videos. Let me stop it and we'll carry on talking. No, fine. You asked for TP1. You asked for TP1 and TP2 and all that. If you had entered here,
Mm.
obviously this gave, yeah, as much as TP3. How would you know, where to place your TPs? You would have to, I mean, okay, the one you currently use, your system, obviously you said it has, pivot one, TP1 and all that.
Yeah, previous, yeah.
Yes, it's kind of like built, it's kind of
No,
like,
I just used one tip. It's just TP1. I don't.
okay,
Yeah, just TP1.
okay. So with this one, that's the setup. You entered here, we use the range
Mm, yeah.
for TP1. So that's 88 pips. You get your 88 pips. So you would have gotten, well, from here to here, which is like here really, from here to here. Note is not from entry, is from the, you know, 88 pips. So having got that, you now begin to use subsequent structure points or pivot points for taking profit as you go along.
Mm.
So you've taken profit here. The next point will be where? Tell me.
So taking from the length of it.
The next
So
TP
from that point to um
using the pivot points as
yeah,
previous pivot points.
yeah, I'm using, oh, you can't see my line.
No, direct me on my own screen.
Can you see where oh, okay, sorry.
So this is where we are. We've taken profit here.
So then the next line, oh, is that my hand? Is that you or mine? Because can you see that?
Take your hand off your screen, because you cannot take your hand off your mouse because I cannot see. You can
Okay.
only see mine.
So take it up to the next where the resistance is up. Keep going. That's where that red is, the red.
This one.
Yeah, yes.
Okay. Well, this has not happened. This is where the line is. All these candles have not formed on the right. So you're going to be looking left instead to determine where to stop. So you're going to be looking left.
Okay, so yes, so that red, where that red is, the eye. Yes, yes, that one.
Right, okay.
On the left here.
So that'll be that one. So
Mm,
that's TP2.
yeah.
How will you determine TP3?
Nothing has formed unless there's something big.
Well, I can see something.
Yeah, but then it will be too close.
You know, you
Okay.
you would
So
have you would have to look left.
yeah, it did look left. There are no further candles
Uh,
above what we showed.
There is here.
Oh, I can't see it on my
There
screen.
is here.
Oh yeah, I needed to move my screen. Okay, all right, yeah.
Okay.
So where the green, yeah, where the green is. That's all.
So, you know, previous structure points or previous support and resistance is what you would use. Okay. Now, question, Bumi. Did you kind of like self-train on YouTube?
No, I had a mentor.
You had a mentor, okay.
We used to use pivot points.
Right, okay, okay.
Well, it's no longer in the country, moved out.
Okay. I mean, pivot point, kind of like he introduced you to IG market and all that.
Yeah, he did.
Right, okay. Okay. So I mean, this is how you would do it. I mean, you would look left because we can see here, okay, TP1, TP2, TP3. There was even TP4, because yes, the price pulled back each time, but it did not come, it pierced the zone, but it didn't go hit TP. It didn't go hit TP. So if you wanted, we could have gotten a TP4 just to look left again.
Okay.
That's how we would have done it. Okay, so we'll leave it here today. And
Okay. I should be able to take a trade using this next week.